Good morning, everybody. It's Chris from Serene Education with the four majors analysis update for the 13th of June 2013. Morning, guys. Hope you had a great day yesterday. Let's have a look and see what's happening on the four majors this morning, starting with Euro against US dollar using the FX8 template. The indicator box on my right hand side complementing the actual template, the strategy template we have on our charts right now, the blue and red buying arrow indicator. Straight away, you can see on the daily, we saw price trading into this consolidated range here in the shape of the 23.6 February retracement, broke above the 38.2 February retracement, the monthly February retracement, quite clearly a major resistance recently. We saw a nice breakout last week, the pullback, subsequent pullback, and then the continuation up to these levels. Break higher, and now you can see the momentum is now still favoring the long-term February retracement area here towards that 50% liner. And as it stands at the moment now, between where it is here to that level, you're still looking at a good 100 pips away. So still some momentum to the upside. Still looking good. In fact, everything's looking fantastic over here. We only have 4 red arrows on this chart, guys. The overall sentiment for this particular pair is looking fantastic long term. So as it stands at the moment now, we should be heading towards or looking to take trades, not to the downside, but to the upside towards that magical 50% February retracement here. Get above that, then ultimately head up towards the all-time highs that we can see. That would be here at the zero, which is taking us way back to these highs that we saw in January of this year. So as it stands now, don't look for anything more than short buying opportunities. MACD has flattened out, but the RMO is still making higher highs, and that constitutes to still a very strong positive trend. Okay, the moment the RMO starts to make lower highs, then you start to wait. You're starting to see consolidation taking place. So as it stands at the moment now, still looking for buying power, sentiment intraday. Look to target these highs here, roughly in this area here, just short of the 13,530 mark. So be aware, upside favorite for today or for the foreseeable future. On to sterling. Let's have a look at the sterling here again. Also, these February retracement areas here, you can clearly see the 50% monthly breaking, which constitutes the prior resistance high that we saw here in April of this year, breaking or heading into that. And we also had the institution moving average at the same place and price taking that into consideration, pulling back. This pullback, if you took the low here to this current high on this candle, you'll see that this pullback is 23.6. So the sentiments inside here, you can quickly see, took the low to the current high. You can see the sentiment was still favoring upside because the pullback was a very small pullback. So it told me that the sentiment was still looking to move higher. We had a bullish engulfing breakout 2 days ago. Yesterday's candle moving higher. And as it stands at the moment now, we're seeing slightly consolidation because breaking the 50%, we're looking at the 61.8 now as our next target. MACD has fallen over, and the RMO is above the zero and making slightly higher highs. However, compared to its European counterpart, you can quite clearly see there seems to be more negativity intraday, not with sentiment. Okay, the R squared is not generally there. We want this to be blue if this is to be genuine selling. So I know straight away this is more of a consolidation, and you can see that the daily and 4 hour and my RMO, my moving averages price is still above the major institution and is still trending. So got to wait just for this to compare. I think as we see the European session open, we're going to see a lot more volume, and that might ideally take us to the upside. This morning we have speaker, the MPC member Tucker speaking for sterling. Other than that, we have for the ECB monthly bulletin for euro, but it's mostly focusing on US this afternoon. There seems to be a lot of news this afternoon regarding core retail sales month-to-month figures, retail sales month-to-month figures, unemployment claims. Okay, very, very important ones to be aware of. So, if anything, we could see those news announcements this afternoon taking place. But if we do see consolidation, as long as it maintains above the institution going forward, above the 50% retracement here, we are still looking this as genuinely buying upside favoritism. US dollar Swiss franc here. Did mention yesterday we can get below this current consolidation, then ultimately we're going to see further sentiment to the downside. This candle over here represented that. I am in this particular trade to the downside because the sentiment is still very much negative, and this is what you want to see, guys. The US dollar Swiss franc, look at that, daily, 4 hour, hourly, the whole lot. Intraday is telling us, the R squared is telling us this is genuine negative sentiment, and we can see that the US dollar has really come unstuck against the Swiss franc. And ever since Fed announced that they were going to be thinking about tapering and the quantitative easing, the QE3 program, we've seen downside. Breaking major support and resistance levels highs over here, for example, trading into them, the bounce, the breakout, the consolidation, and the continuation to these levels. Trading below the 23.6. So now as it's trading below the 23.6, we're likely to see price moving towards this little consolidation area here between the 23 and the 38.2, which is this little one over here. You can see we had a full week of consolidation here, a lot of indecision candles. So we could expect that to happen over here, and that is exactly where my target is for the time being. Get below that, and if I look at it where it is right now to that level, there's still 83 pips on the table to that level, guys. Get below that, then we can look to the long-term one, which will be our 38.2, which is a good 190 pips for that. But you can see the RMO is below, MACD below. We had a bit of consolidation here, which that's the reason why we had the dark candles or the histograms. However, you can see the sentiment moving lower and the RMO complementing that. So as it stands at the moment, you should be looking for nothing more than shorting opportunities for the US dollar against the Swiss franc on this particular pair. Last pair of the day is US dollar Japanese yen, and we went through a huge move to the upside, a massive bull cycle for the US dollar against the yen. However, recently, as I mentioned, with all the news that's come out regarding the Fed, etc., like we've seen the Bank of Japan and their purchasing plan, we've seen the US dollar starting to falter. And in doing so, breaking through that major retracement area here in the shape of the 50% mark here at the 100.07, just around about the 100 mark. And we had the breakout, the pullback, and then we've seen the continuation now to the downside. Bearish engulfing candle here, cancelling out this consolidation range here. And as it stands now, it's trading into the 38.2, which is the monthly fib retracement. An area where we've seen a lot of consolidation in the past. You can quite clearly see we spent most of February and May fighting against this major consolidation area. And I also have my 38.2 on my weekly, also complementing it. So I should be well aware. You can see here again, also like the US dollar Swiss franc, the R squared is very much telling us we should be looking for genuine sentiment. And because all my indicators intraday are showing negativity, it's genuine negativity to the downside. The only thing I need to be aware of is the fact that we are trading into this major support and resistance level, or the fib retracement area here, and I have to take that on board. Got to be very, very aware that I don't want to be shorting into a potential consolidative range. Ideally, if you can see a 4-hour close below this 38.2 mark over here, then we should be looking for further downside to that institution. You can quite clearly see now price really consolidating. RMO still making lower lows, but ideally I'd like to see a close below this area here, ideally 93.16, and then I'll be more than happy to continue looking for further negativity on this particular pair, especially down towards these areas here, towards the 23.6, which is a fair way away. We're looking at it's a good 690 odd pips to that level. So as it stands at the moment now, we should be looking for nothing more than shorting opportunities on the US dollar Japanese yen. We could see a bit of consolidation though before we see that continuation. So be patient first thing this morning, and we do get a break and close below this 38.2 level over here, below the 93.215. Then we should be looking for further opportunities. As long as this all stays red and the R square complements it, just be patient, tough, get the close below that, and then you should be looking for nothing more than shorting opportunities, as I mentioned, to those levels below. That's it, guys. Short and sweet. A lot of nice opportunities today for particular trades. Just be patient. Look at your money management rules. See if they're all back up. The templates are showing some great volume and directive volume, which is important when you're trading. So take the opportunity to actually capitalize on that. Look at these particular pairs and see if there's anything that's going to be working with them. Other pairs. Think outside the box, guys. If that's doing that, what are the likelihood of these particular pairs doing that? Okay, this is where you start thinking cleverly instead of doing a lot more work, looking for things out there. Just see what one currency can do for another currency globally, and take it from there. Otherwise, I'm going to leave you with it. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.